Users of accounting information. Let us now understand to whom the accounting information is most useful. There are two kinds of users to whom the accounting information is useful. One is internal users and the next is external users. Under internal users, we have owners, managers, and employee. Owners. The owner or the proprietor is the person who provides capital to start the business and run the business. Since they bear the risk and expect profits, they use accounting information to assess how well the business is performing. For example, a sole proprietor of a bakery checks the profit and loss statement at the end of the month to see if the bakery is making a profit or loss and decides whether to expand or reduce production. Next, we have managers. Managers, or in other terms, management, we can say, these need accounting data to plan, control, and make decisions that affect the business. It helps in analyzing past performance and forecasting future trends. For example, a sales manager looks at a previous year's sales data to set monthly sales target and decides whether to introduce discounts during the festival seasons. Next comes employees. Employees may use accounting information to determine job security, bonus eligibility, and profit sharing opportunities. They are more interested in the company's profitability and sustainability because their job depends if the company is doing good or not. For examples, workers in a factory might check the annual financial reports to see if the company has made enough profit to give performance bonus or increase salaries. Next, we have external users. These are the users who are outsiders of the organizations but have an interest in the business financial status. First come creditors. Creditors include banks, suppliers, and lenders who provide loans or goods and services on credit. They need accounting information to assess the company's creditworthiness and ability to repay debts. For example, a bank reviews a company's balance sheet and cash flow statements before approving a loan to see if the business can pay it back on time. Next is investors. Investors analyze accounting information to determine whether to invest in a company or not. They want to ensure that the investment will generate a return. For example, an individual thinking of buying shares in a tech startup reads its income statements and finds out it had been making increasing profits for 3 consecutive years or not. If the company is not making any change in its growth, or if it's going like in a negative way, then the person might not invest or might not wish to invest as it might not give him returns in future. Next comes the government. Government use accounting data for taxation, regulation, and policy making. They ensure companies comply with laws and pay correct taxes. For example, the tax department audits a retail company to verify whether it has reported its income and it had paid appropriate tax on the income that it has earned. Citizens. Citizens may be interested in the financial performance of a public sector undertakings or utility service providers, which are funded by taxpayers' money. For example, a citizen looks at the financial report of a government run electricity board to understand how efficiently it is using public funds and whether the fund is being actually used properly or not. Hence, these are the external and internal users of accounting information.